Good afternoon, class. As we'll be looking into another topic today, we're going into a topic, production. Production. Now, when we take a look at this topic, production cut across almost every area of profession. Now, production can be defined in many ways. We can define production as the transformation of raw materials into finished goods. We can also define production as the creation of utility. Now, what do we mean by utility? Utility simply means satisfaction. So when you create something that can give satisfaction, it means you have undergone what you refer to as production. So you have different ways of defining the word production. So let's define production. Production can be defined as the creation of utility. Now, this is the first definition. We can move on to another definition, saying production can be defined as the transformation of raw materials into finished goods. Now, one thing about production is during the process or during the production process, you might undergo production, and if nobody buys that product you've produced, production is said to have not been completed yet. Because what you've produced actually should have this capacity of satisfying human wants. So if you've done that production and the thing is still in the product are still in your warehouse, or the product are still in the place of production, what we can call that, we can just call it partial production, because what you've produced has not yet been circulated to the hands of the final consumer. So we can just say that is a partial production. So for us to have a full production, it is actually when we've created something that can give satisfaction, or when you have transformed raw materials into finished goods. We don't stop there. Into finished goods, which are finally distributed into the hands of the final consumers. Now, whenever you've undergo your production and what you've produced are within the reach of these people, which is the consumers, then we can actually say production has occurred. Now, we have types of production. Types. Number one, we can have the direct production. Number two, we also have what we call the indirect production. Now, what do we mean by direct production? Now, most of you undergo the direct production, that is, in terms of, let's say, you kind of call up a particular person to satisfy an order. Now, that kind of production is also a production, though they are offering you, sometimes it might be offering a service, or sometimes it can be offering a product. Now, the thing is, when that thing is only meeting a particular set of people, then we can call it what? A direct production, because it is only meeting the needs of a particular group of people. Now, but when the thing is meeting the needs of what? Of several people, or is meeting the needs of a whole society, then we can call it what? The indirect production. When you are producing to meet up the needs of a particular set of people, we call it direct. But when you are producing to meet up the needs of what? Of the whole society at large, then we can call it indirect production. Now, looking at the direct production, you also need technology. You need to produce in a way that can give utility. But when you consider the indirect and the direct. Now, the direct, you don't need it to be, you don't need to have a wide supply, or you don't need to supply at a what? At a large quantity. But when you talk of the indirect, you need to supply in large quantities because you want to satisfy the need of an entire society or community. So it means that the indirect production, you need a sophisticated technology so that you can have a mass supply. So under the indirect production, let's have something like a tree. A tree diagram here. 1, 2, and 3. So for the indirect production, we can have here to be primary. We can have here to be secondary. Then we can have here to be tertiary. Now, looking at the primary production, let's take each of these classifications. Now, when you take a look at primary production, what is primary production? This is the extraction of raw materials from their natural habitat. From their natural habitat. Now, we can say the extraction of raw material from the Earth's surface. Yes, we can say from the Earth's surface, but not all raw materials are extracted from the Earth's surface. So it means the best word to use, or the best language to use here is what? From their natural habitat. That is where they stay, or their place of what? Abode. Now, the thing is, when you take a look at the primary actually is when you refine, or when you bring up the raw material in their natural state or in their raw state. It means that anything that is within this primary production, that particular good has no use. It's in the crude state. Now, for instance, if I should give, or if you are disposed to crude oil, for example, you have no use for crude oil in its crude state or in its natural state. The only time crude oil is very, very important is when it is what? Refined, or when it is what? Processed. Now, so we move on to, let's take some examples of primary. You can have agriculture. You can have mining. You can have lumbering. Then, and so on and so forth. Now, take a look at what is lumbering. And when we take a look at lumbering, lumbering is just the process of what? Bringing down trees so that you can what? You can extract from those trees wood for various purposes. Now, that's what we call lumbering. Then we all know what mining is: bringing out precious stones from the earth's surface. Now, we move on to secondary production. For secondary production, now secondary production is what they undergo is in two ways. Now, the first thing they do is they try to transform what they've gotten here. What they've gotten from the primary industry, they try to transform it into what? Into finished goods. That's the first part. And the second part of what they do is they try to arrange component parts, or they arrange component what? Units. Now, take a look at building materials. For building, we need cement, we need blocks, we need roofing sheets, we need nails, that is to nails, we need wood. Now, if you take a look at all these that we've mentioned here, we need cement, blocks, roofing sheets, nails, wood, and so much more. Now, you will observe that each of these items are actually finished goods. They are finished goods, okay? Cement is a finished good. Blocks, they are finished good. Roofing sheet, finished good. Nails, finished good. Wood, finished goods. But if you take a look at them, leaving them in isolation has no use. So what the use is when they are actually being brought together and they are being used to construct something that is very, very useful. So whenever we are bringing these things together to construct important items or valuable structures, then we can call it secondary production. So the secondary production is classified into two. The first thing is, let's write that down. So let me call that one definition A. The conversion of raw materials into finished goods. Then B, arrangement of component units. So these are the component units into useful structures. All right. So that is what we mean by bringing all these things together. So we can see that the secondary production has two definitions, okay? It concerns the conversion of raw material into finished goods, and it also concerns arranging component units into useful structures. Another example can be when constructing roads. You can see that we have different forms of finished goods which are joined together so that they can give us structures that are very, very useful. Now, the third thing we'll be having there is the tertiary. Now, tertiary just deals with the provision of services. Provision of services. Now, when you take a look at the provision of services there, we can have the direct service and we can also have the indirect service. So when you talk of direct services, just like when we see direct production, it is channeled towards a specific set of people. Then indirect, it is for the general public or general society at large. So tertiary deals with the provision of services. So we can give an example like teaching, doctors, and all that. Then we move on to what we call the factors of production. The factors of production. Now, looking at the factors of production, very simple. The first one, we have the land. Second one, we have labor. Third one, we have the capital. The fourth one, we have entrepreneur. Now, looking at these four factors of production, land, labor, capital, and entrepreneur. Now, we all know what land is. It's a free gift of nature, okay? And humans, or let's say individuals, has done nothing to bring it into into physical existence. That's why we call it a free gift of nature. Now, taking a look at labor, labor just refers to the all human effort channeled towards production, all human effort. Then taking a look at capital, capital simply refers to the resources that are used in in production. Resources used in production. Now, we can have capital resources, we can have capital resources that are let's say man-made, okay? You can have the man-made and you can also have the natural resources. So if I say man-made resources or man-made assets, we can call them man-made capital. Then we can also have natural resources, or we can call them natural capital, okay? Then entrepreneur. Entrepreneur is just an individual, okay, or a group of people that kind of arrange these three other factors. They arrange these three other factors, that is, they arrange them in an orderly manner so that they can actually earn one or two things, or actually benefit one or two things. Now, because of the benefit there, it brings us to what are the gains of these four factors of production. Now, looking at the first one, so when we say land, what accrues to land, or what is the benefit from land? The benefit from land is rent. So when we say land, the benefit of land is rent. Labor, Benefit of labor is wages or salaries. The third one, capital. Capital, you have the interest. Then entrepreneur. Profit or loss. So it means if the entrepreneur does not make profits, definitely is going to be making a loss. Now, these are the 4 factors of production. Now, looking at land, land is immobile. You don't move land, it doesn't move, it's just there, it's static, it's fixed. Now, labor, we all know labor moves. Labor is very, very mobile. Now, labor has feelings as well. Land has no feelings, okay? It's just fixed. It's static, it's a fixed factor of production. Labor is a variable factor of production. Now, taking a look at capital, you can also have fixed capital, you can have variable capital, okay? But mostly, capital is taken to be a fixed factor. But capital can be what? Can be variable as well. When you have what you call working capital, it is variable because this is the amount of money that is used for daily running of what? Of a business. So when we have capital, capital can be fixed and it can be variable item. Now, entrepreneur. Entrepreneur is a fixed item. Entrepreneur is also a fixed item, but it can also be made variable. It can also be made variable. So all these 4 factors of production we have here, they can be made fixed, they can be made variable, okay? But one of the important things is that ceteris paribus, that is all other things being equal, land is fixed, labor variable, capital fixed, entrepreneur fixed. So these are the only thing that we have variable here is labor. And if I want to add up another one, let's say we have, let me just put up number 5, raw materials. Let's just add up that one, raw materials. Now, looking at the raw material, if you look at what are the benefits you can get from the raw materials, the benefit is what? Goods. We are going to be getting the goods from the raw materials. Now, looking at this, so now land, fixed, labor, variable, capital, fixed, entrepreneur, fixed, raw material, variable, okay? So we can now have, 2 variable, that is at ceteris paribus, all of that things being equal. These 2 are variable while the rest are fixed. Now, what do we mean by fixed? What do you mean by variable? So that brings us to terminologies of production. Number 1, we have what you call variable factors, or we can call them input. Okay. Number 2, we have fixed factors, or we can call them input. Number 3, we have what you call the output. Now, taking a look at variable factors or variable input. Now, the first thing is, what are input? Now, looking at this, let me have a small formula somewhere around here. A small formula by saying production equals, now we have 5 factors here, right? Okay, so we have land, let me make that LA, then labor, let me call that LB, then my capital, let me call that C, entrepreneur, let me call that E, then raw materials, let me call that R. So looking at this is the production, then LA plus LB plus C plus E plus R. It means if I join all these things together, or if I add them all up together, I must be getting production. Now, in simple terms, I can call this, all this in here, I can call them input. Then I can call this production here output. So it means that if I've combined input together, it gives me an output. Now the output I have here is my production. So this herein lies another definition for production. I can say production is the combination of inputs to get an output. Full stop. That's all. Very simple. So we can see that when we combine input, so input is just like a raw material, or input is just like a resources that is mixed up or that is processed in a production processing. Okay. Now, so we have input and we have output. So it means if I now say variable factor or variable input, variable factors or variable inputs means you can actually change their output. So anything that you can change what it brings, then you call it what? Variable. You can change their performance. You can change what they bring out. That is, you can change their output. So if you can do that, we call them variable. But anything you cannot change their output, it means those things are called fixed factors. Okay? You cannot change their output. So it means that in another language, I can say anything that I can change as product, or anything that affects production, or anything that production affects, can be what? Can be variable. So it means that if my production is increasing and my inputs are also what? Increasing, it means those things are variable. If my production are decreasing and those inputs are decreasing, it means they are what? They are variable. So anything that it is directly related, to production, then we can call it what? Variable inputs or variable factors. Now, you will observe that in mostly every organization, when you have, let's say, people, when there is lesser demand for a particular commodity in an economy, what you have is that company will try to lay off staffs, because there are no demand for its commodities. So it means that the level of demand is affecting the internal structure of the organization. So what you have there is that those laborers is actually what? A variable input. So it means that when they have more demand, they will require for what? For more labor. So we can see the relationship. It's a positive relationship there. So it means that those things are variable factors, things that change with relation to output. Then when we talk of fixed is actually something that, irrespective of the output, they remain the same. That's one thing about fixed. Irrespective of the output, they remain the same. So anytime we talk of anything that does not affect the level of production, then we can call it a fixed factor or a fixed input. They remain the same irrespective of production levels or output levels. Then we all know what output is. Output is the production or the goods that are gotten from the production process. Now, so we have 3, 1, 2, 3. Okay, let's add 2 more. So we come back here. Let's add 2 more. Number 4. Let's say short run. Then number 5, we have long run. Now, when we say short run or long run, what do we mean by short run and what do we mean by long run? Now, short run is just, it's a period in time. Okay, it's a period in time where you can actually make you can make at least some of your factors to be fixed. We all know we have factors of production, right? Now, according to what we have here, we have 5 factors. Is that not it? Now, if we have these 5 factors, if you are making at least one of them to be what? To be fixed, then we can call that situation a short run. But when you have a situation whereby all the factors varies, it means you are changing their output levels every now and then you can call it what? A long run. So the thing is, it is not actually relating to a time period. No. It's not relating to any time period. It's just relating to a period in time where you can actually do some things, okay, about your factors of production or your input of production. So we have the short run and we have the long run.